Hi there, it's Rick on Tesla. Welcome to video update number 3 on my Tesla Lease to Invest test. That's in my series where we kind of document the progress when I made this decision in June of 2021 to, instead of buying my Tesla outright, I decided to invest that money in Tesla shares instead and just to lease the Tesla through my business. So this is a third update, and the first 2 updates were amazingly well, going better than ever expected. We'll have a different update today because it hasn't gone quite so well. And if we could play back a little bit of my last update, I was all buoyant and everything was good. Although I did say this, pending a whole stock market crash, which is possible because it's quite volatile at the moment. And wouldn't you know it, unfortunately, I was correct in that market crash. We're having some huge losses on growth stocks, and Tesla's still, in that growth spurt, that growth journey. So they're suffering as well in the share price. We've had inflation in the US causing a dip in the market, and then of course we're on the edge of World War III with the Russia and Ukraine. Very sad, terrible situation, and that's obviously had a knock-on effect and stability on the markets around the world. Okay, so the last update we had was December 8th, which would have been around here. So I think it was about 1,024. And since then, obviously in these last 3 months, we have had some steep declines, and we are now here at 804.58. So let's have a look now at the share price up there. So we have seen some pre-market small boost due to, I think, Giga Berlin opening, but really this history will tell the timeline of some problems, but a lot of the problems are really to do with the stock market rather than Tesla themselves. Tesla are quietly building these huge gigafactories, expanding the existing ones in Shanghai. But we have had some events, the Cybertruck delayed again and again, and then we've had some SEC problems, Elon selling even more of his shares, but we have got this Berlin news to look forward to, and hopefully there'll be more as these other gigafactories ramp up as well. Okay, so let's have a look at the spreadsheet and see how that looks now. I bought the shares on the 8th of June for $602.98, and they went up 24%, well, 25%, and then the last 3 months before these 3 months, it went up a further 40% pretty much. So that was epic, and obviously it can't just keep soaring up. So unfortunately it went down from that 1,051, and now we've lost 23%, and we're down at 804.58. What does that mean for these figures? So I purchased the UK equivalent of the shares in dollars, so 72,883 worth of dollars, bought me 120, just over 120 shares at that price. So if I was to sell now, it's still well in the green, and it's made a £17,000 profit, or $24,000. My lease cost is $28,000 or $20,000, so it covers 85% of my lease, even if I was to sell today. So that's not bad. I mean, it's a great situation to be in. Obviously, this growth outweighs the dip that we're having at the moment. But hopefully I'd imagine that the Tesla share price itself is undervalued. It's just the market itself. Can that catch up, and can it come good over these next few quarters? So as I've said in previous videos, I will be buying Tesla shares as long as it's below $1,000. I think it's definitely undervalued, having already been up to $1,250 in the past. I think that the current today's price of 800 is pretty much a bargain, and there's going to be some decent growth there. So I should be trying to pick up some more of those in the next few weeks. Okay, so that's it for this update. Hopefully the next one will be in the green and not in the red. But let's see, we're on the edge of potential World War III and other unknown factors at this time of recording. So let's keep our fingers crossed, and I'll see you in 3 months. All right, cheers for now.